Advanced money destroyer ticker symbol AMD reported earnings after the bell and the stock is down 6.3%. This is Nvidia's closest competitors and one of the very few high-performance computing AMD fabless designers. So we are going to talk about AMD, what it means for the AI market, and could this be an opportunity to buy the second best player in the game right now to outperform the S&P 500, guys. But before we dive in, if you could please go ahead, like and subscribe. It really helps me out. Now, you guys produce, make, and design microprocessors, motherboards, chipsets, embedded processors, graphic processors for servers, workstations, personal computers, and embedded system applications. And they focus in the gaming market, the data center market, and the high-performance computing market. So if it goes in a computer, AMD likely make it, especially if it pertains to a CPU or a GPU. Now, the quarter was great. You can't deny the fact the quarter was great. Beating on the revenue estimates right here, beating on the earnings per share estimates, earnings growing 233%. We'll talk about why that is the case. And then we see revenue growing 31%. Very solid stuff, if you ask me. Now, the quarter, like I said, was really good. Gross margins were a bit of a drag, but we'll talk about why in just a little bit. And the net income margins increased from 4 to 11%. Free cash flow margins were massive, 7 to 22% increase in margin. A lot of operating leverage being built in the business right here. And you could see that translated to 872 million in net income, 1.72 billion in free cash flow. The company's balance sheet extremely healthy, $3 billion in debt, $5.8 billion in cash. Very solid stuff. Excluding gross margins, this was a standout quarter looking at the quarter itself. Now, diving into the financials in a more granular fashion, revenues was up 31% from 5.8 to $7.6 billion. Very solid stuff. Cost of revenues grew 55%, and that is why gross margins actually fell, because cost of revenue was slightly higher. However, the company did control expenses below the cost of sales line. Research and development, SG&A, depreciation and amortization all grew less than what revenue grew at 23%, and coupled with a tax benefit of $834 million right here, the company grew net income by 229%. So it was this one-time tax benefit that really benefited the net income line right here, but that is a tax benefit that they get and they don't need to pay, as you can see right here. So net income grew 229%, earnings per share 231% if you include repurchases of shares. Now, looking at the revenue segmentation, data center revenue, ultimately the growth driver for the company right now, grew 14% on a year-over-year basis. Now, that is a little bit weak considering Nvidia's data center segment is still growing at about 50% clip. So Nvidia is taking market share or AMD is losing market share. And that was because there was a lot of China headwinds as it pertains to tariff policy and Donald Trump using semiconductors as a tool for negotiation with regards to these trade deals. So you could see there 14% growth in the data center segment. And this was actually the second consecutive sequential quarter of data center revenue declining, as you can see now, still up 14% on a year-over-year basis. But in the last 2 quarters, we've seen a decline in data center revenue. And every single quarter, AMD comes out and says the data center build-out will scale next quarter, and then the next quarter comes, and that hasn't been the case. Now, we did scale here from September to December, but that has not been the case. The management team have directly lied to US shareholders with regards to what they've said. They've said that every single quarter for the last 3 quarters, and here we are. Now, the lack of growth was largely attributed to scaling their MI350 series, which is in full production. And the AMD management team came out and said this quarter that the second half of the year will support large-scale production deployments with multiple customers, Lisa Su said. So they are expecting probably these figures to go up from here. But like I said, they said that in the previous 2 quarters. Something else that hurt, this data center segment was Donald Trump. The management team said data center revenue would have been better were it not for the Trump administration's ban on selling the MI308 accelerator to China, which cost AMD $800 million and dragged its gross margins down. Furthermore, while the Trump administration has signaled it will allow AMD to resume sales of its Instinct MI308 to China, the company decided not to forecast any revenue from the part in this quarter. The Department of Commerce is reviewing AMD's application for a license that will allow it to resume Instinct MI308 exports to the Middle Kingdom. They're talking about China and wherever else it is banned. And at the same time, their latest chip, the MI350, Lisa Su said that volume production of AMD's MI350 accelerator, the parts match the performance of Nvidia's Blackwell kit. To me, this is a bit of a red flag. The second you start comparing your product to your competitors, your competitor has a superior product. Nvidia doesn't compare their product to AMD. AMD does. That tells you which one is better. Nonetheless, looking at the benchmarks Apparently, they are one in the same. And that is ultimately the thesis when it comes to AMD. Your AMD are about 18 to 24 months behind Nvidia. And look at the run Nvidia's had. AMD could have a very similar run, assuming data center continues to scale. Now, it wasn't just data center that grew. In fact, what grew faster than data center was the client and gaming segment, which is actually a bigger segment here for AMD. 3.6 billion in revenue for this quarter versus 3.2 in the data center. Now, the client and gaming segment was up 69% year over year. Client revenue was up 67%, driven by strong demand for their latest Zen 5 AMD Ryzen desktop processors and a richer product mix. Gaming revenue was up 73% year over year, driven by an increase in semi-custom revenue and strong AMD Radeon GPU demand. So normally what we see is every 4 or so years, there is an upgrade cycle, very similar to the iPhone when it comes to the client and gaming section. And we're seeing that right now. And with the pricing power AMD has, growing 69, 67, and 73% respectively. And then they also have the embedded segment, which was down 4% year over year as demand in end markets remained very, very mixed. And then you have the total revenue there of about $7.685 billion. Now, looking at the current outlook, what the management gave in terms of guidance, AMD expects revenue to be approximately $8.7 billion. That was roughly in line with what the street expected, plus or minus $300 million at the midpoint of the revenue range. This represents year-over-year growth of 28% and sequential growth of approximately 13%. Non-GAAP gross margins is expected to be approximately 54%, and our current outlook does not include any revenues from AMD Instinct MI308 shipments to China. So you can assume that they're going to get that license to go ahead and sell to China. It just depends when it comes and when they can recognize that revenue in the third and fourth quarter. Regardless, this is tangible upside to these numbers right here, assuming some shipments happen inside the third quarter looking ahead. Now, guys, when it comes to AMD, this is the thesis, right? It's that the hyperscalers will continue to scale their data center build out, and AMD, which now has a GPU comparable to Nvidia's Blackwell, competitors will now go to AMD because they are significantly cheaper than Nvidia, right? So there is that competitive dynamic at play. And the goal here is if hyperscalers continue to increase CapEx through 2025 to 2026, and they continue to buy GPUs at the scale they have, AMD will be a big winner. And the market has sort of priced a lot of that in, because when you look at the company, right, at the tariff tantrum lows, the company was trading at a teens multiple. Now it's trading at 41.5 times EV to EBITDA, 41 times PE ratio, and shareholder yield of virtually zero. So the stock is not cheap. And when the stock is not cheap and you put up a quarter like this where data center didn't scale the way it did, you're missing some of your targets, especially some of your metrics, like I said, in the data center segment, that's when the street can actually punish your stock if you don't hit those targets when you have a 41 times forward multiple. But this is how I see an AMD's valuation panning out. So if we take the trailing 12-month revenue of $29.6 billion, right, growing about 15% per year to just under $60 billion in 2029 with a 28% net income margin, right? You get $16 billion, $16.6 billion in net income. Now, net income margins have to grow significantly at this time, and revenue still has to be mid-teens, right? If we just apply 25 times PE ratio, not crazy for a company like this with 28% net income margins growing 15%. Then we subtract the net debt, divide by shares outstanding, right? And we get $264 of a share price in 2029. The current share price is $174, maybe a little bit lower in the after hours. And looking at a compounded annual growth of 8.72%. Now, these are very frothy numbers. This is pretty much consensus revenue expectations, consensus margin expectations. So there will need to be tangible upside in these numbers to actually get a better return. So is AMD a buy right now? I would say not quite, but if it does drop to this like 130 area at the fair value range, I would say it's a buy because the stock is in pole position right behind Nvidia. Now, the discounted fair value of 131 sits right here on this high volume node, just right here. That's the 125 to 135 area. So if AMD does pull back as it has in the after hours, right, and they find support at that like 130, 125 area, that would be a great place to maybe add to a position looking for potentially that second half build out and that 2026 ramp up in the data center build out and potentially retaking those all-time highs, which is what, at the 260, 230, 240 area, somewhere around there. But all in all, I would say AMD is not a buy right now. But if we do get a pullback, I definitely say that the stock is a buy, and it will be one of the leaders, at least for the next 5 years, especially with the AI build out. Now, guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment with the algorithm. Cheers.